Hi, my name is Danny Brown and I'm the CEO of Myriad Real Estate Group, and this is going to be our June market update. So more of the same, the number of active homes on the market continues to decrease, and right now we are hovering around 9,000, little less than 9,000 active homes on the market between single family homes, townhomes, and condos for all of Greater Phoenix. And to give you context, I typically say that we should be around 30 to 35,000 homes active on the market, so our supply is super low. Demand still remains somewhat depressed, but anytime we see mortgage rates get closer to that 6% interest rate, we always see an increase in buyer activity. So even just a little bit of increase in buyer activity causes us to be in multiple offer situations and starts to drive up those list price and contract prices. So we are seeing a very steady increase in the price per square foot increasing in Greater Phoenix. So right now there's a ton of economic data coming out. Inflation continues to fall. The job market continues to remain robust. And the Fed did a rate increase again last month, and now there's conversations about them finally pausing. So right now, experts are predicting a 30% chance of the Fed increasing rates again in June. For one, my opinion is that they're probably going to use this as an opportunity to pause their rate hikes and just kind of let things catch up. So when the Fed is doing things, they're reacting to data, but that all the data that they're getting is lagging. And the biggest lagging indicator right now for inflation continues to be rent. And we're finally starting to see that turn over. Here in Phoenix, we're seeing a lot of higher end apartment complexes that have been built coming online, and that is absolutely bringing down rental prices. And that's kind of happening across the country. So I think we're going to see that rate of inflation fall, and we're going to start to see it continue to fall, and hopefully relatively quickly. The other information that's coming out is conversations around the debt ceiling. So what the debt ceiling is the federal government has to approve basically printing more money to pay all of our debts. Now, all of the debts that we have committed to have already been approved by Congress. So I'm not sure what the debate necessarily is over, because they've already approved spending this money. Now they just have to authorize the Fed to print the money to be able to pay the bills. And so right now they're debating on whether or not to increase the debt ceiling to pay all of those commitments that they've made. This is really bad if they don't approve it. This is bad for Republicans, this is bad for Democrats, and it's bad for America. And it's bad for the worldwide financial system because it's all based on the dollar. And this is kind of making us look silly to all of the other countries in the world, especially when we have a country like China that is looking for weak points within the democratic world and try to poke holes in it. And so it's really important for the Democrats and the Republicans to come together and approve increasing the debt ceiling. Now, if they don't, what could we see? We could see a massive increase in interest rates. We would see America fall into not just a weak recession, but a pretty deep recession, I believe. And this would cause instability in financial markets across the world. Nobody wins in that scenario. So my opinion is that they are going to figure this out. There's a lot of posturing going on right now. I believe it'll come down to the 0 hour, and they'll either come to an agreement for an extension to allow them more time to have conversations, or they'll get it done. So I don't think that we will see America default on their debt. I think that this will get taken care of. It always has. So I really think that this is kind of a nothing burger. And once this is figured out, we are going to see mortgage rates come down. But because this is an issue, last week we saw mortgage rates pop to almost 7%. So as I've mentioned in previous videos, we will see a downward trend in mortgage rates, but there's going to be a lot of volatility while we get there. And this is some of that volatility. But once we get through these conversations, inflation is going to continue to fall. I think the job market's going to continue to remain strong, and we are going to see those mortgage rates continue on that downward slide. I always recommend this. Buy a home when you are ready, financially ready, and you can afford that monthly payment. Now, if you are on the fence, I think that it's going to be easier to buy a home now while the interest rates are a little bit higher and refinance later because you have less competition. What we're seeing in real time is as those mortgage rates get close to 6%, we see a lot of buyers come back to the market. That seems to be the inflection point for affordability, where we see buyers return. So I much rather be a buyer that is in the 6.5% range, have less competition, be able to try to negotiate a deal with the seller and get into a home, and then when those rates continue their downward slide, refinance in the future. It's much easier to refinance once you're already in a home than to try to compete with all the other buyers when those rates come back down. But again, you have to do it when it's right for you and it makes sense financially. For buyers, I think it's a tale of two markets. You've got homes that have been on the market for a while. And so if you need a seller to contribute towards your closing costs to help buy down that rate, which has become very common, target those homes. Look for homes that have been listed for longer than 30 days, and you can sometimes negotiate a deal with those sellers. They're more open to decrease their purchase price, contribute towards your closing costs, do repairs once under contract. So those would be the homes that I'm targeting. When you have homes that look great, are priced right, and are brand new to the market, they're getting multiple offers. We had several listings go live this last week that were priced accurately, that were presented well, and the sellers did everything that we instructed them to do to get the home ready. And those homes all received multiple offers and are selling within the first week. So, that's in an environment where rates are close to 7%. So that tells me that the buyers are absolutely there. And so if you need that assistance, focus on homes that made it through the first weekend and have probably been on the market for 30 days or longer. If you have the ability to not ask the seller for closing cost assistance and have the ability to sometimes pay above the list price, then you can compete and go after those homes that are brand new to the market. So for sellers in this market, as I mentioned, the buyers are there. I've had conversations recently with sellers about seasonality in Phoenix. So typically what we see is the spring selling season is January through June, and we're at the end of May. By the time this video comes out, it will officially be June. So we are coming to the tail end of that spring selling season. Now, because of the depressed buyer demand, I think there's a lot of buyers that are on the fringes that are waiting for those interest rates to come down so that their affordability improves. And again, we see that when those interest rates get close to 6%. So I think our season is getting stretched out because the buyers are there. They're just waiting for the pricing on mortgages to improve. So for a seller, I don't necessarily think that listing in the summer is a bad idea because there are buyers for the home. And so if you are in a position where you need to sell, I think June, July, August are all going to be fine months to do that. And even based on Phoenix traditional seasonality, we see home values increase in the spring, then they pretty much flatten. They don't really go down in the summertime, they just remain flat in that June, July, August timeframe. Then we see an uptick again when the kids go back to school. People return to Phoenix when it starts to cool off. So September, October, November are very busy months for real estate traditionally. The worst time to be a seller in this market is traditionally during the holidays. So I think if you're looking to sell your home, listing between now and November is a great time frame to do that. So that's my June market update. If you have any questions, definitely leave them in the comments. Don't forget to give a like and subscribe, and we will see you next time.